Welcome, Jeff Manzella here with 30,000 Foot Wealth Management. Today, we're going to be looking at the differences between a SEP IRA versus a solo 401k. Major difference between the two is that the SEP IRA can handle any amount of employees. So you can have one or you can have 1,000. There is no limit on number of employees. Where a solo 401k, you can only have one person or a husband and wife. So that is the major difference. But so we're looking at what's the best program for an individual consultant or individual employer who may work in the gig economy. We have many attorneys looking at, we're using these type of things. So we're going to look at max contribution, how much match you have to do, administration, and cost. First, in a SEP IRA is $61,000 or 25% of the employee's comp. So that is the lower of the two. Match in a SEP IRA, you can match 1% to all employees, 4% to all employees, 10% to all employees. The only thing that matters is that it's the same across the board. Administration is very minimal in a SEP IRA. Because these are individual retirement accounts, you have very minimal liability. Along with the SEP IRA, if you do plan on getting employees in the future, it is a good plan to have because the guidelines say that you can actually wait up to 3 years before allowing your employees to enter. So especially if you're a brand new employer, then you have the ability to discriminate for the first 3 years. And cost. Cost of SEP IRA is very minimal, right around $35 per year, and depending on what the management cost is. Now looking at the solo 401k. The solo 401k allows $20,500 if you're under age 50, or if you're above 50, $27,000 of employee contributions. Now that comes off of the W-2. The profit share, we always add a profit share, which allows us to put 25% of compensation up to $61,000. So both of these plans are truly paid by the company, because a solo 401k, you are the company. And the SEP IRA, it is only employer contributions that are allowed in here. Let's look at this really in detail. And this is why we believe that for a solo entrepreneur, the solo 401k is better. Many of us have been advised by our tax accountants to complete what we call a S Corp, which means that you have part of your income as a W-2 and the other part as K-1 income or business income, which is taxed less. In this case, the SEP IRA, to put away $61,000 into and save on taxes and put away for retirement, you would have to declare $240,000 of income to be able to put away that $61,000. Because of the rules on the solo 401k, what happens is that you're taking the first $20,500 out of your salary, and then 25% for the profit share. What happens is you only have to claim $162,000 on your W-2. So if I have the opportunity to claim $162,000 and pay FICA on those things rather than $240,000, it's a big difference. So that is why we always recommend for solo entrepreneurs a solo 401k. Now, match is 3%, but it's only husband and wife, so you're basically putting away your own money. And here's the big difference, is that the solo 401k, again, is only for the owner and a wife or a spouse. It's minimal testing because there are no employees. The government doesn't care too much. A little bit higher fee of $50,000 per year plus the management fee. The main difference is that completing a solo 401k allows you to pay less taxes and put more away. So we believe that is stronger. Any questions? Don't hesitate to give us a call.